Silver just dropped over 3% in its last trading session and gold barely moved. This might not sound like a big deal, but it actually tells us exactly what is going on in the market right now, and it's one of the most important signals that investors are simply missing. Because silver is no longer trading like gold, and if you don't understand why, you're looking at this market completely wrong. So let's understand what's going on. Most people think that silver simply trades like gold. Safe havens go up, silver's up, fear up, silver up. Simply, the model just broke. Why? Well, let's look at exactly what happened. Silver in its last trading session was down around 3.5%, gold about 1.9%. That is nearly double the downside in the same market environment. And here's the key here. This didn't happen during calm markets. This happened in geopolitical tensions, also in oil spikes and inflationary fears. The old market, well, both went up. Gold and silver trading the same. This time, silver got hit harder. Well, the question is, why? The fact here is that, well, silver isn't just a precious metal. It's actually an industry standard. It's what many companies need in order to facilitate the building of their particular products. Right now, the market cares way more about that than it does about it being a precious metal. Reuters actually have reported highlighting the silver demand is heavily tied to industry activity. And actually, when you look at the silver leaving exchanges and more importantly, leaving China, this is all down to the fact that we're seeing solar panels, electronics, and manufacturing supply chains really struggle. In fact, Europe and Americas is difficult to get some of the products over. Why? Well, China is holding on to all of it. And what else is happening right now? Well, oil shock in the Middle East, rising input costs, and slowing global growth are all basically translating to the market is starting to price in a weaker industry demand. So while gold is reacting to fear, silver is reacting to growth, and right now growth is under pressure. Let's make this simpler. Gold essentially is a monetary asset, inflation hedge, the central bank demand, and well, it's a crisis protection. Everyone flocks to gold when things feel uncomfortable. Silver is now becoming a hybrid asset, half monetary, half industrial. And the second part here is that, well, it's dragging it down right now because so many people don't want to hold it as a hedge. They want to hold it because precious metals are simply making a move. If you've been investing in this market for a long time, you've probably seen this before. Back in 2008, silver crashed harder than gold. In 2020, silver lagged before exploding way higher. This is what silver does. It totally overreacts. When we see everyone flocking into gold, silver simply dumps its pants. And that's where it gets interesting because this isn't just about silver. This is actually telling you something about the entire market. And the fact here is that, well, the markets right now, they're worried about gold. Industries are slowing down and early warnings of macro weakness. I don't want to say the R word, but potentially even a global recession is around the corner. At the same time, oil is rising, inflation risks are going up, job data is strong-ish, and the Fed stays tighter for longer and rate cuts therefore become delayed. You're getting squeezed from both sides. That combination is exactly how stagflation starts creeping into the market. So, what are most people getting wrong? And certainly, what are you going to avoid right this? Well, people are treating it like cheap gold. It's not. It's a completely different asset. It's used in a completely different narrative. And like we said, people aren't holding this as a hedge against inflation. The fact here is that social sentiment is all about gold. And actually, the capitulation of buying the dip is moving away. Everyone is still FOMOing into that on-chain asset. Bitcoin, gold, silver, and potentially trying to long oil into oblivion. It makes you telling the story very, very different because, well, here are the two key scenarios. The bullish scenario for silver is that growth stabilizes, industry demand holds, and silver snaps back hard. People simply want it, not just for the precious metal aspect, but because it's usable. The bearish scenario is growth continues to slow, inflation stays high, and well, silver continues to underperform versus gold. Remember, everyone queued outside to buy a crap ton of gold. We didn't really see that with silver. So the question then is, this isn't the dip, it's a total macro shift. So let's summarize. And I guess what do you need to know as an investor right now? Silver hasn't broken randomly. It's reacting to something way deeper that's happening in the economy. And if you understand that, well, you're not just watching price, you're actually reading the market. If you want more breakdowns like this, then do hit the like and subscribe button. But I guess I'd leave you with this. Right now, everyone is FOMOing into gold. Everyone's watching what's going on in Iran and, well, basically trying to hedge against the potential collapse in a global recession. Silver, though, is the one asset that I think people are overlooking. And we know when silver breaks, it breaks big. So right now, silver may just be the undervalued asset that many people are simply ignoring. Why don't you let me know in the comments down below, are you buying gold or are you making the sensible decision and taking a real good look at exactly what's happening with silver? As always, thank you for watching this video. Don't forget to hit the like and subscribe button, and also check a link out to my main channel where we talk about all the crypto market, Bitcoin, XRP, and everything else. Thanks for watching, everybody. See you next time. Bye-bye.